Hello students, I am Dr. Panduranga Nayak, Principal SP's College Bantwal. Now I am going to make a presentation on the topic income from salary, video number 5. Already you have learnt sufficiently about deduction and ATC. After giving detailed information about ATC, I solved one problem. Now let us continue with some more problems. I am going to take up problem number 2. Let us go through the problem first. While going through the problem itself, I will explain the problem. Please make a note of that. While solving, you have to make note of all these things. Okay, from the following information, compute the amount entitled to deduction. Under section ATC, the assessment of Mr. X for the assessment year 2020-21. Okay, life insurance policy of rupees 80,000 on own life taken in 2017. The premium paid is 9,000. See, the policy amount is 80,000 and the policy is taken on own life, that is qualified, and the policy is taken in 2017. Any policy taken after 1/4/2012, 10% premium is qualified for deduction. So 10% of 80,000 is 8,000. So out of 9,000, 8,000 is qualified for deduction because the policy is taken after 1/4/2012 and the rate of premium qualified is 10%. If the policy is taken before 1/4/2012, then the premium percentage is, qualified amount of premium is 20%, not 10%. Life insurance policy of 15,000 on married daughter's life. So whether the daughter is married or unmarried, employed or unemployed, premium paid on that policy is qualified for deduction. But here when the policy was taken, it was not mentioned. Therefore, we will apply the standard rate 10%. So 10% on 15,000, that comes to 1,500. That is maximum. So actual or maximum, whichever is less. So here 1,000 or 1,500, that is 10% of 15,000, whichever is less. So 1,000 is qualified. Life insurance policy of 40,000 on wife's life taken on 1/5/2017. The premium paid rupees 5,000. So 1/5/2017, that means 10%. 10% of 40,000 is 4,000, and therefore only 4,000 is qualified. 4,000 or 5,000, whichever is less. So 10% of 40,000, that is 4,000, that is lesser than actual amount. So 4,000 is qualified. Contribution to recognized provident fund 15,000, that's qualified. Contribution to public provident fund, that's also qualified. Group insurance premium paid, that's also qualified. National saving certificate 8th issue, that's also qualified. Accrued interest on national saving certificate 8th issue, that's also qualified. Loan installment repaid, what we mean here is principal amount to LIC of India, that is 25,000, that's also qualified. And the loan was taken in 2010 to purchase a DDA, that is Delhi Development Authority, could be flat for own residential purposes. So the entire amount 25,000 is qualified because tuition fee paid of his son 15,000. So that's also qualified. So let's look at the solution here. LIC premium on own life 10% of sum assured, So 8,000, though the premium paid was 9,000, qualified amount is 8,000. Life insurance premium on married daughter's life. So though the amount paid is 1,500, what is paid is qualified because actual amount paid or 10% of sum assured, whichever is less. LIC premium on wife's policy 4,000, that is to be taken, 10% of 40,000. Contribution to recognized provident fund is qualified. I already told you. Contribution to public provident fund qualified. Group insurance premium qualified. National savings certificate 8th issue, that's also qualified. Even accrued interest on national savings certificate 8th issue, that's also qualified. Loan installment repaid to LIC, we presume here that is the principal amount, so 25,000 is qualified. Tuition fees 15,000. See, if you total the qualified amount as far as each item is concerned, the total comes to 1,64,930. Now entire 1,64,930 is not deductible under 80C. So what is deductible is actual qualified amount or 1. Yes, we'll take up problem number 3. From the following particulars of these particulars of the SSC, calculate the deduction under 80C for the assessment year 2020-21. LIC premium of 10,000 on own life policy of 40,000. So if nothing is mentioned, we have to apply 10% of sum assured. 10% of 40,000 comes to 4,000. So 4,000 or 10,000, whichever is less. So 4,000 is considered. 5 years postal time deposit, this is qualified for deduction, so entire 10,000 is taken. 55,000 subscribed to home loan account of National NH Bank, Housing Bank, National Housing Bank, so entire principal amount is qualified. Further interest accrued thereon is also qualified. There will be 18,000 paid to mutual fund of UTI, that is qualified. Rupees 4,000 to unit linked insurance policy of UTI, that is also qualified. 6,450 contribution to recognized provident fund, this is qualified, but interest accrued thereon is not qualified. Contribution to public provident fund, that's qualified, but interest accrued thereon is not qualified. Repayment of rupees 12,000 which was taken for extension of house, that's also not qualified because only for purchase of house and construction of the house, if loan is taken, then any principal amount repaid is qualified for deduction. So here it is for extension, renovation, etc. So that's not qualified. Rupees 1,000 deposited in post office savings bank account, so that's also not allowed. Life insurance premium paid by him on his brother's life policy, that's not qualified because policy taken, premium paid on the policy taken on the life of self, spouse or children, that only qualifies for deduction under 80C. Okay, see the solution here. I have explained already. LIC premium restricted to 10% of sum assured. So though you have paid 10,000, only 4,000 is qualified. 5 years postal time deposit is allowed. Subscription to home loan account as well as interest here. You have to make a note of this. Interest is also considered. Mutual fund of UTI is considered. Unit linked insurance policy of UTI is considered. Contribution to recognized provident fund is considered. But remember, interest accrued thereon is not allowed. Similarly, contribution to public provident fund, interest allowed is not considered, but principal amount is considered. The total qualifying amount is 1,52,850. But remember, the maximum deduction available under 80C is 1,50,000. Therefore, only 1,50,000 is to be taken. So the qualifying amount of deduction under 80C is restricted to 1,50,000. That is 1,52,850 or 1,50,000, whichever is less. Further, interest accrued on recognized provident fund, on PPF, repayment of housing loan taken for extension, post office savings bank account, and premium paid on policy taken on brothers policy are not qualified under section 80.